The importance of taxation.
Everyone, we are the group 3 and our report is drama presentation. And for scene 1, it is all about the newly imposed trade law. And for scene 2, it is the comparison between the old tax rate compared to trade law.
Scene 1. Trade Law Personal Income Tax.
There are two professionals, one is engineer and the other is doctor. They were friends since high school and haven't talked since then. One day, they met accidentally in the mall.
By the way, what is your professional now? What is your professional now? So, did you follow your dream to be an astronaut?
Now, I wish, but I am a doctor of ophthalmologist, and now I knew.
You must be rich by then. You must reach by then. So I am an electrical engineer. Did you heard about the newly imposed tax law?
Yeah, it's kind of disadvantage for us who work hard and being paid at high rate.
So based from I heard, the this law is more basically just simple and effective system as per constitution. Then so where the rich will have a higher and bigger total will have a bigger contribution and the poor will benefit from the government program and services.
Oh, I see. I just hope that this won't affect much in my personal income tax. Truth, I'm still single. I'm still a lot of expenses. That I need to sustain.
So this rate law is focused on the personal income tax and focused on the personal income tax such as simplifying the estimate dollars and the increase of the increase the increase of petroleum products and and increase that sales of tax of automobiles, and this is the and this is the this is the student leverage.
So basically, so basically, those who are accepted, company that are obligated with the buying, they fix in higher prices.
For me, this trade law is good for all those people who have a low salary, like me, because I'm still 200, I'm still below 250,000, 250,000 as a target. So my salary except me to deduct, and which is a good news. And for a budget, due to reduce of tax, the government will make up for the loss of the revenue, and we should expect the more higher price of fuel, gas, and electricity, and the vehicle, and we should expend the money we should spend the money for the thing most needed.
I see. I see. Yes. I see. Let's discuss how this trade law and benefit this to all.
So the government, so our government, we need to balance to balance the new loss revenue.
Further explanation. What is trade law? Trade law is a tax reform for acceleration and inclusion law. It's the first package for comprehensive tax reform program envisioned by the President Duterte administration, in which it seeks to correct the number of deficiencies in tax system to make it simpler, fairer, and more efficient. So one of the main goals of the trade law is to create a more just, simple, and more effective system of tax collection, in which, as per the Constitution, the rich will have a bigger contribution and the poor will benefit more from the government's programs and services. And these are the train law vision for 2020. Poverty rate reduced from 22% to 14%, uplifting some 6 million Filipinos from poverty. Law-abiding country. Person always obeys the law and is considered to be good and honest because we believe that the law should protect decent law-abiding citizens. Peace within the country and with our neighbors. To graduate upper middle income country status from the current low middle income country status. And by 2040, the train law envisions to eradicate extreme poverty, which I believe that is impossible, but anything is possible if the government will do their job properly. And the second is the exclusive economic and political institution where everyone has equal opportunities. and to achieve high income country status. And with that, there is a good news on the implementation of train law, in which the simplified tax system will increase to the take-home pay of most individual and encourage compliance. As you can see in the graph, the annual taxable income that is lower than 250,000 will be exempted from paying the tax rate, in which many Filipino people will be happy that they are being exempted from the tax reduced from their salaries. On the other hand, the rich people will uh, contribute more from the government since they have higher taxable income, which is higher than 250,000. Now, for that 4 years, they will adopt this annual taxable income, in which they are obliged to pay higher, which because they are richer than other people. Because the train law lowers the personal income tax for all taxpayers except the richest. Under the train law, those with annual taxable income below 250,000 are exempted from paying the personal income tax. But when it reaches to year 2023 onwards, there is a good news for the rich people, in which those who are not exempted will see lower tax rates ranging from 50% to 30% by 2023, in which if we compared it to last 2022, their tax rate are being deducted by 20%. But if you look at in the year 2023, it will become 15%. And that is a good news for the rich people. On the other hand, the people who has or the employees who has 250,000 below will still remain exempted from paying tax, will which results to high take home pay for them to consume and to be able to buy their daily needs. And this is a good example of tax reform for acceleration and inclusion law, known as the train law or the train bill. Now, if we look at into the picture, there is a person who is a call center agent, which has a monthly income of 21,000 pesos, which if we times to 12, it is the annual basic salary of 252,000 pesos. And there is a 13th month pay, which costs of 21,000 peso, a mandatory contribution of 15,166, a personal exemption of 50,000 pesos, same with the allowance for dependent if there are two children. Now, if you compare the old tax rate and the train law, we can see that the old tax system added the A and B, which is the annual salary and the 13th month pay, deducted to the 13th month pay the mandatory contribution, the personal exemption, and the allowance for dependent. And by that, if we subtract that, that will conclude to 136,834. Now, into the old tax rate, at this amount of money, you are being taxed 20% from your salaries. Now, compared to train law, added the A and B, which the annual and the 13th month pay, deducted from the 13th month pay and the mandatory contribution, will result to 236,834, in which in the train law, it is below 250,000, which you are exempted from paying the tax, which results to high take-home pay, which equivalent to 21,867, and that is a good news for many of the employees that has below income of 250,000 pesos. Now for the second is simplifying the state and donors tax. Under the train law of estate tax, the state is now flat a 6% rate on the amount in excess of 5 million compared to the old tax rate of 20% of the net estate value. Now the estate with a net value of 5 million and below will be tax exempted. Family homes that are valued at no more than 10 million will also be exempted. Under the current tax law, only families home worth 1 million are tax exempted. And for the donors tax was revised to a flat 6% regardless of the relationship between the donors and the donee. Previously, the donors tax was 2% to 15% if the donors and the donee are related and 30% if the donation was to a stranger. Donations or gift below 250,000 are tax exempted. Donation with value of at least 250,000 are taxed using the new tax rate of 6% on the amount of excess of 250,000 regardless of relation to the donor. Now this is a bad news on the implementation of the train law. The other one is the increased prices of products and other services. This is due to the reduced taxes the government need to make up for the loss of revenue. Because of this, certain goods will have bigger and higher taxes. Buyers and consumers should expect higher prices for fuel and gas, electricity, and vehicles. So the train law simplifies the excise tax on automobiles, but lower price cars continue to be taxed at lower rates, while more expensive cars are taxed at higher rates. Though the income taxes will greatly decrease for almost all employees, they would need to spend more money on the things that they might need. The second is the increase in DST and dollar deposit. Aside from increase of products and goods, documentary stamp tax, which are tax levied on special documents, papers, agreements, etc., increased to 50% to 100% except for the property, savings, and non-life insurance. Foreign currency deposits units increase from 7.5 to 15% final tax on the interest income. Capital gains of non-trade stocks increase from 5 to 10% to 15% final tax net gain only. Scene 2. Train law, old tax rate versus the newly imposed train law.
Is work in different company with different salaries. One day, they meet up just to reunite and to distress from work.
Hey, good. What's up?
I'm good, but my work is very simple. So many girls need to be done.
That was why I wanted for us to meet in the summer.
While the two of them are enjoying their free time, one of them bring up the topic about the old tax, and tax rates.
Hey, dude, have you heard the thing that imposed tax in money?
Yeah, what's that?
I know regarding on the taxes we pay for the doctors paid from our monthly salary.
Yes, man, I heard about it. When I compare to all tax rates, I think this is much beneficial.
So have you think your income tax figure to reach the salary and earning from taxpayers in the previous year? The simply tax according to the old rate.
Yeah, I am very much happy to the new tax rate system. as of the old tax rate, 15% deducted from my salary. Now I am, but now I am exempted. Now I can be paying more what I need and what I want.
Miss John, you're right about that. One of course, those are the plans of this law, what I'm sure. There are increased prices of products and other services in order for the lower to balance the economic growth.
Oh, that is so great then. That's okay as long as we are accepted, then we need to worry.
Okay, let's just engage our time.
Further explanation. Old tax rates versus the train law. So the new personal income tax rates are now in effect starting January 1, 2018 after the approval of the train law tax reform. Compared to the old tax rates which are in use until the end of year 2017, the new tax rates implemented by the Bureau of Internal Revenue or the BIR, which revised the tax rates charged on each taxable income bracket, revise the annual gross income eligible for tax exemption, and remove the personal exemption ranging 50,000 pesos and additional exemption from maximum of 100,000 pesos if a payer. Personal exemptions. These are simplified amounts that a taxpayer may deduct from his or her taxable income for self or for each person who qualifies as a his or her dependent. Under the new income tax reform, salaried individual earning gross compensation of 250,000 or below per year are exempted from paying taxes. This is a drastic change from the past wherein the minimum range earners were exempted. In addition, the new BIR tax reform removed the personal exemption amounting to 50,000 pesos and additional exemption of 25,000 pesos per qualified dependent, maximum of 4 dependent or so maximum of 100,000 addition exemption enjoyed by taxpayer in the old system. Now, if we look at into the old BIR income tax rate, the person who has 10,000 income per year or below are being taxed 5%, while 10,000 above to 30,000 are being taxed 10%. Above 30,000 to 70,000 is 15%, and for 70,000 onwards to 500,000, it will be taxed by 20%, 25%, 30%, and the highest is the 32%. Now that is the old tax rate that being followed last 2017 of December. If you compare that to the newly imposed train law for the income tax, the amount of 250,000 below of taxable income per year are being exempted, while 250,000 above to 400,000 are being taxed by 20%. 400,000 to 800,000 are being taxed by 25%. 800,000 to 2 million are being taxed to 30%, and 2 million above 8 million or so are being taxed by 32% and 35%. That depends on how much excess their taxable income rate per year. And that is the newly imposed train law.